Hi, everybody. Good afternoon. Thanks, Ivan, for the introduction. Well, I will call this a lunch conversation. We're in the midst of lunch, and we are discussing venture capital. And by the way, a warm welcome. Great seeing you, Ganesh, co-founder of Quona Capital, and Siddharth, partner with Omidyar Networks. Great to catch up with both of you. Just taking a cue from the previous session on technology is God, right? And we've seen the kind of impact of that in the last couple of years, especially in the last 1.5 years. I just want to straight away get to the venture capital of things and some opening thoughts from my side. Clearly, one looks at the fintech sector, right? You have tech absolutely at the heart, if not the core of this revolution. And venture capital is playing a pretty significant role in backing all this ecosystem build-up. If you look at 2020 and 2021, touted to be the year of venture capitalists, touted to be the year of listings and SPACs. Just some numbers from our Grant Thornton Deal Tracker report. In 2020, we saw private equity investments of $40 billion, 40 billion. In 2021, in the first 8 months, we've already seen investments of $34 billion. So pretty significant momentum. Out of this, the fintech investments alone has garnered close to 10% of this private equity run. Close to $3 billion of money has been invested in 2021, 132 odd deals, and $1.8 billion was invested last year. So we're already seeing a huge momentum in tech. Clearly, 2021, India has been roaring, if I may say, to see the birth of 30 plus unicorns. Out of that, 6 are from the fintech sector. So I guess with that kind of landscape and set, if I may go to Siddharth. Siddharth, it's a crazy times, right? Means we've seen tech, fintech all over the place, venture capital really fueling this. But sharpening into the fintech sector, given your experience, you've been in the industry for long, you've seen the ups and downs. Can you hint us, what are we seeing today in India? Happy to also get some global trends. And, what are the segments where really venture capital is participating? Over to you, Siddharth.
Thanks, Raja. And I guess the sense of enthusiasm that you so aptly conveyed in your introduction, I think we're all seeing that in the VC and the investment landscape. But here's the interesting thing. I mean, the funding scenario is an outcome of the fact that businesses in this space are really, really seeing traction. And the most encouraging part over the last 2 or 3 years has been that fintech, which for the longest time seemed like something that was confined to the top few percentage points of the Indian population, is now completely mainstream. And for us as investors focused on social impact, that's actually been the most outstanding part of how the sector has developed in the last 7 years. Lots of reasons have caused that to happen. Clearly, one of the unforeseen impacts of COVID has been people have been a lot more comfortable using technology across areas, including in fintech. The government has taken a lead in putting forward infrastructure platforms like UPI and now the account aggregator, which are making things a lot easier than they were in the past. But most importantly, I think founders have started believing that really large businesses can be built to meet the bulk of the needs of the bulk of the Indian population. That's what excites us most as investors focus on social impact. So to give you a sense, 3-4 years back when fintech was topped off, we were talking about the top sliver of the Indian population. We were talking about mostly credit card spending, maybe large ticket lending, maybe SME focused businesses. But what we've seen since then is that payments are now ubiquitous. People are more and more comfortable taking payments on digital platforms across the income pyramid. We're seeing lending through buy now, pay later formats getting to be a lot more prevalent. We're seeing the rise of what we call and what we are enthused by, the entire digital rails ecosystem, where there's a bunch of regulated players who believe that they need to access customers who in the past they weren't accessing very well. There's a bunch of online-only players who have very interesting distribution, but haven't had access to financial products to be able to provide to their customers. And now there's a whole slew of players who've come up who provide the digital rails for both of these parties to talk to each other. And that's to me been one of the most interesting innovations that have happened. So far, it's been on payments. It'll go from payments to loans. It'll go from loans to insurance. And it'll be a spectrum that we'll see across the board. If I look at our own investment trajectory over the last many years, we've had the luxury of evolving as the industry evolves as well. So starting off with traditional lending onto fintech-based lending, where Quona and us share a joint portfolio company which has benefited from the tailwinds. From that to insurtech and savings, which again are needs which now are getting more and more fleshed out for the entire population. And most recently to the entire digital data space, where companies of ours like Discovery are making insurance happen to any customer of any online platform with almost minimal overhead, or companies like M2P Yap, which are making payments happen for any fintech platform on the fly. That's a pretty exciting times for what we are seeing. And to reiterate, this excitement is, valuations are just one part of the excitement. That's a bit of a lagging indicator. I think traction on the ground is really, really impressive. And that's very heartening to see.
No, thanks, Siddharth. I think traction on the ground, there is excitement, but as you aptly put it, its impact, right? It's impacting a large population. So I guess going back now to Ganesh. Ganesh, you've obviously again been in this sector. You've seen it. What's changing, right? Siddharth talked about the opportunity, the scale. But when you're investing, what's changing? Is there a couple of trends that you see changing?
Thanks, Raja. I think just taking off from where maybe Siddharth left off, certainly the landscape is evolving quite rapidly on number of specific dimensions. And we sort of also talk about this often, where with every passing year or two, you may not see visible dramatic changes in the country, but over a period of 5 to 10 years, at 10 years, the landscape completely changes. And frankly, that is not true anymore. Even in a period of 1 to 2 years, we are starting to see pretty dramatic changes in the infrastructure, in the escape velocities, performance that companies are hitting in terms of scale. So a few key things which we certainly have seen shift in the ecosystem. One is, first and foremost, the quality of talent is significantly going up. I mean, it was the base was good in India to start with, but it's exponentially going up over the last few years. And you're starting to see some phenomenally hungry, persistent, eager to learn and make a mark. Entrepreneurs want to make a mark. And the outlook is also becoming global. I think previously, one of the things we have seen in India, and again, as Quona, just like Omidyar, we invest in a number of countries. In Quona, invest across Asia, Africa, LATAM, and Middle East, pretty much most emerging markets. I think the global outlook of Indian entrepreneurs is growing, both from a learning perspective and from the point of view of exploring markets which have adjacencies and similarities to India. And that kind of also opens up a way of thinking which is showing in execution. The availability of capital obviously has significantly gone up. The reason, I mean, and there is a good and bad to that, and we all understand that. But if I put my glass half full hat today, what I would say is the reason it's good is because number of new opportunities we are seeing are going to sort of redefine the ecosystem, or even or define a new market. And for market defining companies, it's very hard to sort of do it in a constrained way. And from day one, be able to sort of orient yourself to P&L. And these companies would need fair bit of capital to create category defining leaders, or these entrepreneurs would need that kind of capital. And we are seeing that being available in India today, which wasn't the case, to this extent, even a couple of years ago, 7 years ago, 10 years ago. The flip side, obviously, is I think number of opportunities are getting funded, which probably don't deserve it. And that's, a separate discussion. And also, I think the soft infrastructure in the country is evolving. Like, of course, UPI and NPCI and India's tax story is fairly well known. But the impact of this soft infrastructure on the ability of startups to that can effectively leverage it to be able to deliver next-gen solutions It's kind of hard to quantify in one number, but it's everywhere to see. It's everywhere to see. And we were also, we led a round in the pre-IPO round in India Mart, which was the Series B round. And frankly, through our years of investment in India Mart, we saw a dramatic change with, once internet access and mobile internet access became a lot more accessible in the country. Just that was enough to see the impact it had on SMEs consuming digitization and digital commerce. So yeah, I think we are seeing a lot of tangible, specific changes that are changing the landscape quite dramatically.
No, thanks, Ganesh. I think a wonderful point made about the access to capital. I guess capital is not in short supply. We have enough capital. But you also touched a very critical point on that quality of talent. I think that's a very positive sentiment, right? To make India the third largest startup destination in the world. Moving to a question I can't resist but to ask the few, maybe with Siddharth first. Valuations, right? We've absolutely seen crazy valuations. We've seen obviously some listings happened in the e-commerce space. There's some companies lined up for listing as well at some amazing valuations. Your views on valuations specific to fintech, right? You talked about the opportunity, but how do you see this? Is it sustainable? Some corrections required, but we want to get some thoughts.
Good question, Raja. So valuation, in my sense, is that valuation, like beauty, is in the eyes of the beholder. If a person comes in and sees the upside from where they're coming in, absolutely makes sense. Are valuations way higher than they were last year? I mean, without a doubt. Are folks already investors in companies looking good because of valuations having run up? And absolutely. You will find a spring in pretty much every investor's step nowadays because they feel they're super special because their portfolios are doing well, whatever the realities might be. That said, I mean, do I worry about valuations running ahead of themselves? I think a little. So that is a concern that we all face. The good part is that business dynamics also are moving somewhat in lockstep. Maybe the multiples for businesses have gone up way more than the businesses themselves have increased in size, but the business dynamics are improving. There is an increased focus on how to make the economics work at a unit level and then scale them. Even at a more basic level, there's an increased focus on monetization, which earlier wasn't that much of a case in many of the larger fintech companies. So things are changing on that dynamic front. I think the best part that we've seen in this is that, and I hope it lasts. There's no way for me to tell whether it will or it will not. There are enough risks in this market, but the listings of privately held players on the Indian stock exchanges, I think that's amongst the more positive things that are happening. It's a clear dose of discipline that is being enforced on players, which so far work in a different manner. And I think that discipline will help. It'll broad base the network of investors who want to participate in this space. In the long term, whatever the ups and downs in the interim might be, I think it's a pretty strong positive. So it's a bit of a long rambling answer. If you were to say valuations are high, I would say absolutely. Are they justified? I think I would say partly. Is there risks for downside? I think yes, but in the long term, I think we're fine because the traction that we're seeing, we've gone from $0 to $1 trillion annualized of UPI transactions. 5 years back, who would have thought? Right? So that is laying the rails for many, many, many things to build on top of that, which I think we will see long-term value from, whatever the intermediate impact might be.
Well, thanks, Siddharth. You very well articulated all the drivers of valuation. Moving to Ganesh, your take. I think you're on mute, Ganesh.
Yeah, sorry about that. I think Siddharth covered the dynamics of what we're seeing in the current market well. Just to add to that, I would say it's an evolutionary process and learning process for us also. Clearly, we are seeing some dramatically incredible valuations, which is also a sign of potential in the market, to be honest. And sometimes it's hard to calibrate potential on a linear basis. It has discontinuous jumps, and we are seeing that in the market, which is why again some market participants, investors are able to price it accordingly. And the nature of innovation is you're going to have lots of experiments. Some of these are going to fail. If 90% of them fail, we clearly are not in a market that is that is operating with reasonable sanity. But most likely there is going to be a healthy percentage of failure. But out of that, we're going to see some game-changing and transformational solutions, whether it's companies, whether it's a movement. Like I was in an interview earlier today where somebody described BNPL as a movement. And again, we are in 4 BNPL companies around the world. I hadn't really thought of it exactly that way, but maybe it's true, because what's happening now is number of companies are saying, look, this should be part of our offering. And as long as we can, whether we do it ourselves or through partners. So
can you elaborate that, Ganesh? BNPL, so that people
yes. So yeah. BNPL, as folks might have caught here and there, is the short form for buy now, pay later, which is sort of a hybrid payment / credit solution. Essentially, leveraging the digital rails, transaction history, etc., at the point of sale, whether it's online or whether it's offline, to be able to provide a customer the ability to defer their payments and really structure it as a a simulated credit product. The concept is simple enough, but it takes a lot of things to kind of stitch this together, whether from a credit underwriting perspective, understanding the customer profile, KYC, integrating with the point of sale and checkout, be able to have follow-through collection practices, so on and so forth. And to be able to instantaneously in real time approve the customer at the point of sale, online or offline, it takes a fair bit of things to stitch together. And I think I'll leave it at that for now in the interest of time.
Sure.
But essentially, it's a simple concept which actually has become a pretty powerful engine or catalyst of digital, fueling the digital economy across markets. And we're seeing it now happen in India as well over the last couple of years. Again, longer discussion on pros and cons. In some places it's relevant, in some places it's not. But the bottom line is, innovation doesn't come with a label of good or bad. It's up to us, how we utilize it. And when we kind of take it to an extreme, it obviously starts becoming risky, and that's kind of dynamic. So we are, I guess if you look at human history, we will find the balance. There's always going to be innovation, some phenomenal successes, and number of failures trying to copy those successes. But net, I think we'll move forward. Right. The question is who's making which bets as entrepreneurs and as investors.
Well, absolutely. Thanks, Ganesh. I think some innovations, of course, there'll be failures, but as you said, you got to innovate. And I think India is definitely at the heart of innovation. Talking about bets, and I guess question to Siddharth, when you look at fintech investments, right, these are disruptors, some companies, and who are backing at the early stage. What are the 1 or 2 things that you look at when you're investing in a fintech player? Is it the entrepreneur? Is it the tech? What are the 1 or 2 things? I'm sure the audience would love to hear from you.
Sure. So it's what you mentioned, but it's clearly the entrepreneurs. The early stage investors will come in at the seed stage up to the Series B stage. And clearly the founder is critical to the business's success. So a lot of our work is in understanding the founders' motivations and their drive and what their thesis of impact is. Because if alignment doesn't exist there, we'll be in for a rough ride. That's something that's best avoided. We try to get a sense of where the market is moving. I mean, there are broad trends that we are seeing across the board, and how is this company, how are the founders thinking of that? But really, the biggest thing that we are seeing is that boundaries are blurring. So if I look forward 5 years, you will have payment companies becoming banks. You'll have consumer internet companies offering insurance to their customers. You'll have e-commerce companies offering loans to their customers. And this is the natural progression of how this industry will progress, where you will find customers who have trusted relationships with some entities, mostly online, some offline. These trusted entities will try to get solutions in the hands of their customers, which they don't have access to directly, but they have the ability to channel through them in a way that meets the needs of those individuals. So be that BNPL for e-commerce or for education, be that insurance through a loan provider, be that banking relations through payments. I think those boundaries, as they start blurring, the role of the founder becomes even more important. How entrenched are they in the ecosystem? How much of a vision do they have about how these things come in, and which part of this will they play in? At some level, 5 years out, every company will be a fintech in some shape or form. How are we playing in that? And how do we make sure we encourage that as an important part of our decision-making criteria as well?
Thanks, Siddharth. I think you've laid it pretty clearly. Some form it would be a fintech player. Ganesh, your views when you're taking a bet investment. What are the one or two things? Is it the founder or something else as well?
I think Siddharth has covered a number of aspects, and also there are obviously a broader set of usual aspects that all of us look at as investors. So I'll skip that. But being able to get comfortable that an entrepreneur can balance creating commercial success with and building an impactful business, I think is important for us. I mean, Siddharth talked about it, and I think it's a very nuanced criteria, which is which takes reasonable amount of interaction and engagement and exchange of ideas with the entrepreneurs. Also, I think being able to get comfortable that an individual or set of founders are trying to build something transformative while respecting the regulations, given that we're talking about financial services or financial services adjacencies, is very important for us. I think there is a healthy mix of entrepreneurs who come from tech and think they can change financial services like e-commerce. And there is a healthy set of entrepreneurs who are very conservative from a financial services point of view. So finding an entrepreneur who has that blend is also not easy, and that's something we look for very closely.
Well, great. I think the moderation and the blend between financial services and tech, and I think you touched upon a very critical regulation, because in my view, regulations is finding it hard to keep pace with the changing platforms in fintech. I guess I think the last theme that I would like both of you to cover is, if you were to look crystal gaze the next 3 to 5 years fintech for India, right? And we've seen, as Siddharth talked about payments, Ganesh, you talked about the innovations in so many areas, right? Insurance, wealth management, distribution. And the previous panel talked about how tech is making sure the efficiency of the system is just getting enhanced by some of these platforms. But crystal gazing next 3 to 5 years for India, from a venture capital's perspective, how do you see the future of the sector? Is there some downs? Is there some spots? So maybe Siddharth, starting with.
Sure. I think convergence to me is going to be what's going to drive much innovation. The rails to do that are already getting put in place. So UPI and NPCI was probably the first step along the way. The aggregator format that we're seeing right now is another step along the way. Now, I think in the regulatory system that we have here, there's a fair amount of the infrastructure that is needed for innovation that is being put in place. Things that were done in a proprietary manner by fintechs earlier are now being done in a manner of rails available. So innovation can then be focused on what you're best at, as opposed to having to do a full stack for everything, which I think will drive a fair amount of the new fintech development that we're seeing. At Quona India, I mean, we're investing in a bunch of different areas, but this theme of convergence is something that we are most keen on, which is how do we make sure that we can facilitate this? How could we make sure that the rails for these can be put in place so that distribution, which is the biggest problem as we want to go down the income stack, can be solved in a cost-effective manner. It's not that solutions don't exist for people who are at the lower end of the income spectrum. They do, but they're not affordable, or the distribution channels are not such that you can make that work in a unique, economics positive manner. I think that's increasingly changing now with these rails coming in place. And how do we keep doing that? How do we make sure we can back the right entrepreneurs that are taking insurance and savings and lending and wealth management, whatever it is that is required for individual customer segments down the income stack? I think that really is where a bulk of our focus will end up being over the next 7 years.
Right. Perfect. Ganesh, your crystal gazing?
I think to add to what Siddharth's saying, couple of areas we are excited about if we take a long-term view, it would be around think certainly we'll see a lot more in SME digitization, which is which is a very broad theme. Again, interest of time, I won't go into elaborating that, but there's so many sub themes there. We have several portfolio companies in the space. Of course, the first one when we launched Quona was India Mart, but from there we're probably in the third generation of it already, even in our own portfolio in terms of type of companies. Certainly, we're going to see a lot more of it. Along the way, we're also going to see some failures. So, you sometimes need first generation failures for the second and third generation to succeed. And we are seeing some of that already in SME digitization in some of the companies started, a couple of years ago. The other theme, other broad theme, which again has a lot of sub segments, is embedded finance. We are in general going to see sort of an embedding and experiential evolution of financial services in a lot of contextually, a lot of different non-financial situations. And so, even in our where that could take the dimension of, as we are seeing in our portfolio, crossover between verticals, whether it's agri and financial services, commerce and financial services, retail and financial services, health and financial services, so on and so forth. So we're going to see a lot of those themes. At the same time, we'll also see evolution of infrastructural solutions like open banking. It's a kind of a loosely used word today, and it means a lot of things for a lot of people, but it's going to be a very the number of specific use cases evolving there, which will show how we are going to create effective embedded financial service experience in non-financial platforms. So I would say, yeah, those are two which we are certainly excited about.
Sure. And I guess my last question, maybe I'll start with Ganesh. Ganesh, with you first, is maybe one advice for the fintech entrepreneurs. Right. Obviously, there is a bunch which is already scaling up. There's a new bunch that will be coming up. We are working with several of them at various stages of their journey. What are one or two advice would you want to give to a fintech entrepreneur which is building its business today? Looking at the future.
That's a good question. Advice is usually unsolicited, and it's you only realize in hindsight whether it makes sense or not. But I definitely say one of the very important things is for entrepreneurs to be very, very, very careful in picking investors especially in early stages, and probably also as they go along, because the space is getting very complex, and you need folks who can understand what you are building towards, not what has been built in the past. And I think we are seeing a lot of, again, not surprisingly, but we have been seeing a lot of themes where we are, Brex for India, Stripe for India, whatever you name it, X and Y for India. I think our ecosystem has evolved in a unique way. We got to learn from the world, but need to build for the country. And you need folks who can understand who can work with you and help you develop a better solution and a lasting company. And I think today it's hard to separate that in the noise, both on the entrepreneur side and on the investor side.
Oh, perfect. I think select the investor right partner, absolutely the key. Final words from you, Siddharth.
Yeah, I think Ganesh makes a good point. The solution for India actually is in many cases already better than the solution that exists in more developed markets. So if I want to start a Stripe for India, I will actually find UPI is a better solution already. So tailoring a solution to the Indian context, I think, is critical. Also, very importantly, unlike in other sectors, fintech is a sector where you're moving money about, and it's a sector where regulation plays an important role. So I think a founder coming in, I think, needs to have that mindset that I'm not just creating a great consumer product. I am making sure that I'm taking care of all the regulatory aspects that might at some stage come in. Because finally, you're transferring the most valuable commodity a person wants, their money, or you're dealing with that. So that it's a rare thing. Not every founder wants to do that or thinks in those lines. But aspiring founders who will create big businesses in fintech will solve both of those. The tech and the regulatory chops will be both available. And along that journey, I think as they think about who might be their investor partners early on, it will help to have folks who've been on the same journey with other partners themselves as well. Because designing this upfront is a lot better than hoping to embed it into the solution at some stage. So I think that holistic vision is something I'd encourage people strongly to have in mind as they get started.
Well, terrific, Siddharth. I think thanks a lot, Ganesh and Siddharth. I think obviously we could have continued for long, but I guess while we started with the excitement of the sector, we really captured the essence how regulations are important. It's a convergence happening, financial services and tech. There's a great opportunity, right? The payments have seen it all, and of course the impact. I think with that, I guess clearly India has a great opportunity in this space. And thank you, gentlemen, for making a very crisp and valuable insights to all of us. Thanks.
Thank you, Raja. I appreciate it. Thanks a lot.
Thank you.